If it looks like a bubble and swims like a bubble, several parallels between the dot-com bubble and today's stock market are strong. And there are differences, of course. It's not saying it's exactly the same, it's going to end up exactly the same. This is a different situation today. We're 20 years after. A lot has been modified. Technology is certainly more integrated, more important than ever before. These companies here are absolutely critical, not all of them. Some of them are certainly absolutely critical and fundamental to what we deal with today, that people, deal with in business and so many other factors. But we cannot overlook some obvious facts. If you see what had happened with a stock like Tesla, it went from a point, where it was certainly elevated, more valuable than many, many other large companies. And then it just went up in a straight direction, just completely straight up. And the actual production of the car company did not go in line with that. It's not as if something fundamentally changed with this company. No, this is a lot of the speculation. Those who tried to short the stock as it climbed to a ridiculous level got burned big time. And that's what's happening with all of these big companies that aren't, or even small companies that aren't necessarily producing anything, but certainly the stock's been going up. So that momentum has really been self-perpetuating as more and more people get in on it. I have been resisting the comparison between the dot-com bubble and today's stock market, but the similarities have grown too strong to ignore. Here are 5 areas where the parallels are strong, along with one caution about applying the bubble label to the broader market. And of course, that makes a good point, because not every stock is like this. You can't necessarily say, well, the stock market is overvalued. Certain things, according to many, many metrics, you don't just use one or two. It's PE ratio, it's all crazy right now. That's not a good sign, because there could be many factors that would affect it. But you look at it on a much deeper level. You use 20 indicators, you use 40 indicators to kind of give you broad analysis on something. And when it's out of whack that bad on so many different indicators, you got to start asking questions. You have to start saying, is this where I want to have this much of my portfolio in, or should that be, let's say, shuffled around a little bit? Exponential growth in the price of storage stocks, anything connected to electric vehicles or clean energy, has gone ballistic in the past few months. They're talking about Tesla being the obvious example. And you could see at the bottom there, floating on froth, Renaissance IPO index. If it's an IPO, you know it's going to do well. Doesn't even matter what it is. It's got the word IPO there. It's got the word SPAC there. Let's do it. Let's just throw our money in. Does that make a lot of sense? Not really, but certainly that's what we saw back in 2000 timeframe, 99, 2000. So this right here is a definite and clear parallel. That's what they talk about at the top over here, talking about SPAC, talking about IPOs. What they get into down below that, and I think I show you on the next one, is essentially that these stocks that aren't even the actual stock, let me pull it up if I have it here. Yes, right here. These stocks aren't actually the stocks that were supposed to do well. Like, for example, here, we're talking about Zoom. Zoom, everybody's using Zoom software. Nobody goes to work anymore. They just stay at home in their pajamas and they conduct meetings online. There's just one thing though. The Zoom ticker symbol apparently is not the one that is what people were supposed to be buying. They just went in completely ignorantly, bought Zoom, didn't even look into the stock at all, and sent the stock soaring right here. Even more excruciating is to buy the wrong stock, as happened with last year's rush into Zoom Technologies, owner of the ticker Zoom, and not a lot else, rather than the better known Zoom Video Communications. Their ticker is ZM. This month, Elon Musk's call to use Signal, this right here, imagine you had a completely unrelated company called Signal Advance going absolutely berserk. It's a penny stock, and then suddenly it's worth almost $40 overnight. Now, what does that do? What does that send that signal of that people are simply speculating at a rate we haven't seen since the dot-com boom and bust. Now, does that mean it's going to end exactly the same way and this is it and that's no, not saying that, but we got to know the parallels and we got to be very, very careful where we are putting our money. Now, there's much more in here. It talks about several parallels. If you want to check it out, hit the link in the description. The stock market is at or near the most expensive levels ever by most measures. By most measures, remember that. When will it matter? And I think that's the point that many have made. I've talked about it here, and I know a lot of my subscribers feel the same way. I know that it's out of whack. I know it's crazy. I know that the PEs are completely unjustified. But it no longer matters anymore because this time is different. Well, let's look at it a little closer. Okay, I've got charts to show you. I've got a lot to show you here. A battery of valuation tests from Goldman Sachs shows that the market will be at or near the most expensive levels in recent history on most measures. And they do talk further about it. I can't get into it all. There's just too much. But anyway, stock values look less extreme relative to bond yields and corporate free cash flow. There is a distinct greed hive that's buzzing with option speculation, engineered short squeezes, and a heedless momentum buying of marginal illiquid stocks. However, when financial conditions remain very loose and the direction of expected earnings is up, there tend not to be a general reckoning due to high valuations. And that's what's happening today. The stock market keeps going up. We don't need to worry about corporate profits. That's completely out of the window. Nobody cares anymore. If the company loses a lot of money, actually, generally, those companies do well. And actually, everything could just do well. It doesn't really matter. The stock doesn't really look at what's happening with the company anymore. It's just about the optimism. It's just about the euphoria behind it. How much euphoria is there behind a particular stock? How much marketing has been done around this stock? And it's less important of what the stock actually represents, the business. That the whole point of a stock is supposed to raise the money for the business itself to do really fantastic things, and then the investors get the profit from that. However, if the company says that that we are planning on doing this fantastic thing and they haven't even done anything yet, like look how many stocks are valued at billions and billions of dollars and they haven't produced anything yet. I mean, yeah, okay, sure, they're eventually going to do something, but I mean, when and how well will it perform? Nobody even knows. There are multiple car companies in the situation here because everybody's trying to find the next Tesla. Now, that's strange. That's not good. I understand that we need to be financing the future. We can't be stuck in the past and holding on to old ideologies and all this stuff. But I mean, we have to be realistic at the same time. We're talking about billions and billions of dollars going in areas where I believe a lot of times the capital is misallocated. It could be used beneficial to make money for investors in different areas. And that's not happening today. Take a look at the chart that came from there, Goldman Sachs, providing all of this. Whether we're looking at the US market cap over the GDP, also known as the Buffett indicator, at 100%. We've never seen anything like this. You can see the other ones, EV over sales, EV over earnings, PE ratios, whatever. It's all nonsense anyway. And, you just go through for yourself. I could show you all the charts and all of this stuff all day long. It doesn't mean as much as just simply taking it as a whole to realize how outlandish the actual mentality behind people in that none of the things matter anymore because the Fed will not be able to print more cliff. They're not going to print more cliff. If you want more cliff, you have to build a cliff, okay? That means production. That means actual people working, getting out there with materials, with engineers, with everybody working. All of them working. Do you understand? Not printing up garbage doesn't do anything productive. In fact, it's a detriment to the entire system. But in my opinion, I'm going to give you my opinion here, the destruction is intentional. But let's not go there because some people, unfortunately, can't handle it. It's not just the US, it's not just tech stocks. Check this out. Emerging markets gripped by greed now turn to the Fed for fresh spur. I mean, come on. We're looking at this during a time when the Federal Reserve has done so much. They have gone way beyond their borders of what they're supposed to be doing. And they're saying, look, you got to do more. You've got to do more, Fed. Come on. You haven't bought stocks directly. You haven't gone on the open market and bought them all up. Please, come on, help us out. We have only seen it go straight up during this period since March. You've got to do more. You've got to do more. Every single indicator has to be completely blown out of the water. And otherwise, you're just not doing enough. I mean, they're talking about the fear greed indicator, which I think I have the chart in the next one. But it doesn't matter where you look. Everything today is based on basically the complete opposite of the economy. The economy is looking extremely weak in many areas, not everywhere, but it is looking extremely weak overall. And yet the stock market overall has performed extremely well. That isn't a good sign. When you see that, the hope here is that, okay, now it turns around and the economy starts going and moving in that direction. But at least for now, the worst of the pain has yet to be felt. So why is it being priced in this way? Very strange. Here's the chart that corresponds to that. Greedy gains. Fear greed indicator for emerging market stocks hits the highest since 2011. I'm actually surprised it didn't go higher than that. But of course, it will. We'll see it continue to go up, obviously. And then it will be at the levels we hadn't seen since 2007. And everybody believes that doesn't matter anymore, but we'll see. Only time will tell. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. Simply by clicking a button on your screen, you help me out. Thank you. If you want to learn how to sell stuff online, you're interested in e-commerce, you can learn for free at my website, theamazongps.com. The financial system, it's complex, convoluted, very difficult to understand. And the reason they did this is to keep you out of knowing the truth. Well, that's why I wrote these 2 books, to break it down, to make it easy for you, for your friends, for your family, and to basically make it super easy for anybody who doesn't know anything about this stuff or somebody who's actually experienced to get all the details, fill in all the blanks, and make it so digestible. Definitely check it out at the link in the description. And if you want the audiobook, that's available at themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? You definitely want to check it out. Click it. I'll see you there.